Okay, July 16th. We have less than 5 minutes till market open. Already did some charting. What we see from prior price action is on July 15th at 2 a.m., NQ did not take out this high over here, which means it did not sweep last week's high. ES, however, did. ES ended up taking out this high and sweeping last week's high, meaning that we created a bearish SMT divergence, which is partly what drove price down yesterday and in overnight session. We left behind some bearish liquidity as well. And now what we're seeing is we don't have any 4-hour confluences aside from this inverse fair value gap right here. So we had this bullish fair value gap that we properly inverted with the candle body closing below the candle body of the second candle. So we created an inverse fair value gap here that I think there's a decent chance for at some point, I don't know about today, but I think price can return into that inverse fair value gap while sweeping this buy-side liquidity. You see this ascending buy-side liquidity, these wicks ascending, providing liquidity for price to grab while also entering the inverse fair value gap and then continuing in the dominant trend direction, which could be bearish depending on, if we end up having a market structure shift to bullish before that happens. But that's an opportunity, which is why I marked it along with this buy-side liquidity. But that's the only thing we see on the 4-hour. I guess this bullish SMT divergence, which I'll get to. But on the 1-hour, we have this 1-hour gap right here that we just entered and could fully respect or not. We'll have to wait and see. We have this intermediate high right here, this 1-hour intermediate high in a bearish context. An intermediate high is the highest high within a bearish fair value gap. So that's the intermediate high. Price could grab that liquidity while staying within the bearish fair value gap and then continuing downside. And we have this one way up here. I'm not really too worried about that. We don't have to focus on that. Also important to note that this buy-side liquidity, these three rejections here are rejecting on the bottom trend line of this massive bullish flag that we have. It's rejecting on the bottom trend line of it. And it's interesting because NQ is below this bull flag while ES is above the bull flag. So, of course, we don't want to make a trade based off of a pattern, but it's just nice to recognize. And then we have London high and London lows marked, right? For buy side, bullish liquidity, we have this massive bullish fair value gap here that we did test on July 13th at 11 p.m., but it was not really a deep retracement into this bullish fair value gap. Small wick in, rejection. So obviously this would be considered an intermediate low within the bullish fair value gap. Also just a key liquidity level, even if I didn't realize that this bullish fair value gap was even there. So I think that there's a decent chance that price at some point reacts at this level right here and then continues bullish. That's a possibility as well. But what we see right now is NQ taking out this 12 p.m. Wednesday low. Now, this low is yesterday's low, okay? And so previous day low. Now, NQ has taken out this previous day low while ES hasn't. ES in relation to this low is somewhere up here. ES has not taken out this low. So we have a bullish SMT divergence. But what I think will happen is this liquidity level right here, also very key, is not far away from where NQ is currently at. So I think that we will respect this bearish fair value gap. We will retrace down into this zone, then continue bullish. And by that, we will have still a bullish SMT divergence, but a deeper one, whereas ES will still have not taken out this low over here. ES will be somewhere over here. So we'll still have a bullish SMT divergence, but it will be a deeper one. And that alone will allow us to carry out the price action from this bearish fair value gap, generating, that sell side liquidity, dropping into a deeper discount zone while creating a bullish SMT, and then price wanting to find an equilibrium again. But what this is doing, I think the purpose of this SMT in relation to this previous day low is SMTs serve two purposes, right? It could be to entirely change market structure and drive price in one direction, or it could be to temporarily pull price back into a discount zone for then price to continue in the dominant direction. I think that that's possible in this case where we had an SMT, price is pulling into a discount zone, that being a 1 hour bearish fair value gap. Once it does that, continuing in the dominant trend direction, which is bearish. And part of what that means is we might end up wanting to take shorts somewhere in here. If we end up respecting this bearish fair value gap, I'll look for confirmation on a low time frame, like 1 minute, 2 minute, 3 minute, maybe 5 minute, and I'll look for us to inverse a bullish fair value gap and then take a short entry. But the reason why I'm not that confident in taking shorts rather than I am in taking longs is because taking shorts when like somewhere over here, right? Because we'll have a rejection. Hypothetically, let's say that we respect this bearish fair value gap with this candle right here. And it closes at 10 a.m. with us properly respecting it, rejecting off of that bearish fair value gap. I would have to wait for confirmation, which would probably happen at a lower level. So if I'm entering over here for confirmation somewhere in this level right here, I am not that far off from this intermediate low, this bullish fair value gap. The risk to reward is pretty tight, right? I'm not working with that many points, and it could just mean I have to risk higher, but I want to go for a larger move and then take a smaller trade within the larger move, because that is more security, right? Instead of having a move that the opportunity is 87 points, less than 100 points, sure, it's possible. You could just risk accordingly. You could risk higher to meet your desired take profit amount and have your desired risk, which in my case is 500 stop loss, 500 take profit. You could do that, but the smarter and safer move is to be a part of the larger trend that will kind of close out the day and take a small piece of that. So we're gonna have to adapt. I mean, it might mean that we enter a short position, but we're gonna kind of have to wait and see how price reacts to this bearish fair value gap. I think we'll have to wait till 10 a.m. to see what we have here. So I'm gonna wait till I see something new, till I see price heavily manipulate in one direction or another. Again, AMD will happen at market open every day, all the time. It's just to what degree, right? Price will accumulate, it'll manipulate the accumulation in one direction, and then it will either distribute in the same direction or distribute in the opposite direction. So I'm gonna take a look at that and then resume once I have a clearer picture. So I will say, like macro right now, we are bearish. We're making a lower low. And we still have this target, right? So with this bullish SMT divergence, which could mean we're pulling price back into a bearish discount zone, and then continuing in the dominant direction, which in this case the dominant direction is bearish. It's possible that we might have to take shorts, especially since big picture we're still in a bearish SMT divergence. So I think we have a 1 minute inverse. Or we're about to. I'd be open in taking a short position somewhere in here the second this candle finishes, because we have a bearish fair value gap right there. Yeah, okay, I could do 3 contracts, or honestly, I could do 2.
Order filled.
Stop loss at 394. If I did 3 contracts, I would have been a little bit over 500, and 500 is my max risk. So if we pull back into this fair value, into this inefficiency right here, I'll add a position. I'm open to that, but otherwise we're just looking for a 1-to-1 ratio. One to one, boom. Now we wait. This is kind of different than the last few days have been. The last few days, we've had to wait till 10 a.m. for any kind of move. I hope this is the move here, because I mean, we have a 1 hour rejection, and granted there's still 23 minutes left in the candle, but if I see a long wick rejection like this with the bearish candle, I mean, look at this 5-minute bearish candle. Massive wick rejection, entering all of this 1 hour inefficiency with candle body closing below the prior candle, below 3 of the prior candles. That is a lot of selling pressure, obviously. And then I just looked for the highest time frame bullish fair value gap for us to inverse. I didn't see anything on the 3-minute. I didn't see anything on the 2-minute. I saw a clear one on the 1-minute with this candle right here. Clear 1-minute inverse, targeting a 1-to-1. I know that like price in this level right here, this liquidity pool is acting as a magnet for price for a few reasons. We have this low right here, and we also have this intermediate low over here, along with this 1 hour bullish fair value gap. So that's kind of what I'm thinking. We do have this 15-minute. Now that I think about it, there is a 15-minute, which I'm not sure how we will react. To that. I might want to go break even on that, because there is 15-minute inefficiency here, and I'm thinking it is possible maybe price will want to jump into that intermediate low over there. Let's see how this candle finishes. Because this 15-minute bullish fair value gap, I mean, if we decide to respect it, that could be bad news. Oh, we opened above that prior candle. That is not great news. Yeah, I mean, this is a clear bullish candle right here. Long wick, no wick on the bottom, and followed by the bearish candle opening next to it. That does not look that promising. I'm gonna bring my stop loss to break even on that, and we could always re-enter a trade if we need to. But let's just do that, the close of that candle right there, or the open of that candle. And if we decide to take it out, we do. So I'll wait for that. It's very possible that we want to respect this 15-minute inefficiency. Now, based on like fair value gap rules, this is not a fair value gap, because the candle body of the first and second candle first and third candle is not within the wick of the second, right? The candle body is not within the wick of this second candle, any of them, the top wick or the bottom wick. That is typically one of the rules for a valid fair value gap. Otherwise, it's like a continuation candle. This was kind of in the middle, because I wouldn't call it continuation, since the bodies of the first and third candle are still small, like just as you would see for a typical fair value gap. But I guess this rejection into this 1 hour gap here, that's all we really needed. Powered by this bullish SMT divergence, pulling price into a discount, sweeping London lows. Yeah, sweeping London lows. So I think that's another factor, right? Both candle bodies closing below London lows. This 15-minute candle having 4 minutes left, I believe it will close with below this London low in the 4 minutes. Clear wick rejection off of the 1 hour, and then 1 minute inverse fair value gap. So not a terrible 1-to-1 ratio, but again, in 4 minutes, the 15-minute candle could still finish however it wants. So could get stopped out. I'll wait. If I need to re-enter, that's what I'll do.
Order filled.
All right, order filled. Perfect 1-to-1 ratio trade. Could have potentially dragged my take profit down here. I think there's a decent chance for that, but I was satisfied with the 1-to-1, especially with my entry confluence being us inverting this 1 minute bullish fair value gap, and me entering the trade only 4 minutes into market open. That's a pretty high liquidity time period, right? 4 minutes into market open. Price has every right to hit that 1-to-1 and then flip, take out this high, target this intermediate high up here, and then continue bearish. So I'm pleased with this 1-to-1. I think fastest trading day this week. Take profit, 375.